Good morning, everybody. It is finally Friday. It is Friday, the 12th of December. It looks like to another end of the week. And we've got to be quick because Clive Lambert wants us to be done by 9 a.m. because obviously you can listen to this live because he needs to go book some tickets to some band called Wolf Alice. So be amiss for me to waste a bit of time by talking about that. Anyway, Mr. Michael Brown, how are you?
A very good morning to you, Ryan. A very good morning to all of our listeners, our friends, our family, my mother, my father,
Hi, Mum.
Ryan's mother, Ryan's father, Clive's family.
One sec. Sorry. I'm just knocking on your mum's door. One sec, just wake her up.
Oh, fuck off.
And on that note, welcome to the morning cast.
Dear. Right, I'm off.
Usual disclaimer, this is recorded live. So, trigger warnings, etc., etc. As usual, myself and Michael Brown will intend to add a bit of value today. Put a smile on their face.
Oh, come off it. It's a Friday. There's no fucking value in this podcast.
Well, we'll put a smile on their face at the very least.
We will.
Like I remember your mum last night.
Well, maybe not Clive's, because if we waffle on long enough, then he won't get his tickets.
Well, fingers crossed.
Actually, I'm seeing him later. I best be careful.
Well, this is it. I might not be, unfortunately. We'll see how much work I can get done this morning. So anyway, on that note, I better stop waffling. And nothing we say here is investment or trading advice. Nothing we say is an endorsement. Later, we'll make it very clear. And I'll tell you what, then, to crack on, I will kick off the morning blast, as usual, with a update from, indeed, our dear friend Clive Lambert from Futures Techs on yesterday's pricing action, overnight price action, and what levels to look out for today, if that's okay with you, Michael.
Fire away.
Good. Equities markets, they bounced nicely yesterday after a weak start. The S&P 500 is eyeing its all-time high at 69.54. Obviously, this is futures. Dow futures made a new all-time high yesterday, but we don't like the Dow on this show. The Nasdaq still struggling with resistance around 25,870, but did see a deep dip finding buyers yesterday. On this side of the pond, obviously the better side of the pond, it's a similar story with the early weakness attracting dip buying mob. The Euro Stocks 50, that printed 5,791 so far this morning, not far from its all-time high of 5,825. The Bund failed at Monday's Marabuzu resistance at 127.75, then saw a weakness back to 127.36. I'm actually, our good friend Tom, as in Tom Wiseman, our friend that helps us sort this the podcast out, he's very keen for us to start a merch store and do some bits like that. Something regarding Marabuzu has to be on a mug or a t-shirt.
Absolutely.
Where was I? Forex cable got up to one spot 34.38, where some sellers responded. Eurodollar posted another green candle, reaching a high of one spot 17.62. Gold, the yellow metal, saw solid gains to resolve the recent funk. That's with an N, not a C, to the upside as expected. This can gun for an all-time high at 4,398 now, according to Clive. Silver got up to 64.72, another new all-time high. All-time highs normally tend to beget more all-time highs, so no surprise there. Of course,
Clive say that? Because that's something I say quite often.
That's also, no, he didn't say that. That's me and you saying that.
No, right. I thought we got a ringing endorsement from him.
No, not at all. No. We're not, he doesn't like us that much. The support, we love you, Clive. The support at 64.10 has done a job this morning to keep the bulls well and truly on top of things there. So one to watch on the downside if you do start drifting lower. CME Copper, Dr. Copper is not CME, LME Copper is also making a new all-time high this morning, trading to fresh air, printing 11,952 so far today. Zinc also caught a solid bid and is eyeing a big Fibonacci level at 3,239. Brent, one of the oil benchmarks, saw weakness back to 60.77, where we found some opposite trade. $59.93 is the mid-October low and bounced, fingers crossed. Henry Hub, US Nat Gas, posted its third big red candle of the week, selling off to 4 spot 234. This was given back all November's gains in just 4 sessions. We did say on Monday, in fact, that we did see a big old turn in the weather forecast, and it was going to get much warmer in the States. And we did say the nat gas could be under pressure. Not patting myself on the back because we get plenty wrong, but I am going to say when we get a few things right. TTF held support, so European nat gas, the benchmark held support at 26.53. And the Marabuzu resistance at 27.13 apparently has been weighing. EU carbon markets posted a big up day and is now retesting 84.50 to 84.55. This is rolling to December's 26th contract on Monday. So one to watch. This is the thing with these nat gas kind of contracts, you've got to be aware which are the actively traded, because it's not something like nat gas and stuff. It's not necessarily the front month, but it's the actively traded contract. And that can get a few people caught out. So one to watch there. But that's it from Clive. And from me for now. What have you got for us, big man?
Very good.
Being covered in coffee.
Actually, I've managed to get most of the coffee out of my shirt, thankfully. So the little stain remover that we keep in the office coming in handy.
What's her name?
Mate, I'm sat here on my own at this point. So
of course, because you normally work from home on a Friday, but you're going there, ain't you?
Out on the town. If I survive. Excuse me. Where should we start this morning? Actually, let's just start in the equity space, because of course the S&P, Clive mentioned futures trading close to a contract high. Well, the cash market actually closed at a record high yesterday for the first time since October, ending the day about 0.2% higher. And it was noticeable how the dip buyers came out in force once again, with the market shrugging off that little wobble that it had after Oracle's earnings on Wednesday night, and rallying pretty strongly throughout the trading day yesterday. In terms of fresh catalysts, they were relatively limited, to be completely honest with you, and actually trading activity on the whole was pretty limited. I think we are very much as expected in kind of year-end mode at this moment in time. Certainly now that we've navigated the event risk of the final FOMC meeting of the year, which was, of course, on Wednesday evening, a couple of days ago. In terms of economic data, we did have the latest jobless claims figures out of the United States yesterday. Initial claims at 236,000 in the week to the 6th of December. Yes, that's a big rise from the 191,000 prior, but it's roughly in line with the 4-week average of initial claims. And of course, the prior print was likely skewed lower by Thanksgiving. So it's not especially worth worrying about in terms of that uptick compared to the prior week. Continuing claims, meanwhile, they came in at 1.938 million, which was bang in line with expectations. We have also, of course, had the latest UK GDP figures out this morning, which were utterly grim, to be completely honest with you. Data pointing to the economy having contracted by 0.1% on a month-on-month basis in October, considerably worse than the 0.1% expansion that had been expected. That marks a second straight monthly contraction in the UK economy. It also means that we have now had 4 months in a row of either no or negative GDP growth. And on a rolling 3-month basis, covering the August, September and October period, the economy also contracted by 0.1%, which marks the first contraction on a rolling 3-month basis since the back end of 2023. Clearly, pre-budget uncertainty exerting a hell of a lot of pressure and acting as a complete handbrake on economic activity through the month of October. You would certainly expect that to continue into November. Of course, the data will be out next month, and probably into the festive period as well, given that budget contained absolutely nothing in terms of measures aimed at boosting economic growth.
Can I just?
I was expecting you to have a rant then, so that's why I paused.
The pregnant pause. Well, the thing is, I am a broken record. It's too late for that now. It's just save yourselves. So I'm not going to go down too much that rabbit hole, because everyone on this show by now should know that. We're pretty much where we both stand on this. But I will say, last night we did have some news that the Trump administration is restructuring the Financial Stability Oversight Council, and the reason they're doing this is to prioritize economic growth and reduce regulatory burdens. And it was our friend Besant that announced the shift yesterday, citing concerns that strict financial rules pose a risk to economic expansion. Now, this is exactly the kind of thing I would love our government to be doing.
Yeah, don't hold your breath.
No, absolutely not. They're not going to do it, obviously, because it's too much like common sense. But this, and also, there's very easy things you can do to boost growth, right? And everyone hates on net zero, but for a reason. If you look at this, you only need to look at the stats to see that, we're not, by scrapping net zero isn't saying we're all of a sudden going to start burning a shit ton of coal and start pouring toxic chemicals into the oceans and stuff like that. There is a quite a happy medium where, you are still trying to be as efficient as possible. And let's be very honest, it's in industry's favor, in industry's kind of own upside to be as efficient as possible with energy in the first place, regardless.
Yes, it costs so much.
Exactly. What they're doing is they're forcing people to pay up for net zero, which then ends up reducing revenues. So they're getting less of a return on net zero anyway. Net zero policies. It's literally suicide, and it's self-defeating. So it's so easy to kind of it drives me good. And anyway. Right, moving on quickly.
Yeah, let's move on very quickly from that. Actually, we will move over to the United States, which you obviously alluded to. We heard from Commerce Secretary Howard Lutnick yesterday saying that he wanted a deeper rate cut from the Fed. No particular surprise there that Lutnick is continuing to basically just bootlick his boss. But interestingly, the Fed are trying to effectively Trump-proof themselves. We had news late last night that the Federal Reserve Board have unanimously reappointed 11 of the 12 Reserve Bank presidents to new 5-year terms. This is something that is usually complete non-event, to be honest with you. Every 5 years, in a year ending with a 1 and a year ending with a 6, the board in Washington, D.C. just have to sign off and renew all the 5-year terms for the 12 regional bank presidents. They've actually done that 2 months early this year. And the reason why they've probably done so is because there had been a lot of speculation that President Trump would potentially seek to meddle in this process. Of course, we've had both Besant and Hassett recently talking about there being potentially them wanting to bring in a residency requirement that someone's lived in their reserve district for 3 years before taking the president's job. So it looks like the Fed board are trying to basically make sure that they preserve their independence. The only regional Fed president who wasn't reappointed was Raphael Bostic, who is the Atlanta Fed president, and that's because he is retiring, not because of any sort of conspiracy theory. So an important development at the Fed last night. And just lastly, in terms of the United States, the Treasury had quite a busy day yesterday, as you said, Ryan, tinkering with financial regulation. They're also looking at potentially expanding access to corporate tax breaks that are being provided for research and development under the One Big Beautiful Bill Act. This plan could come as soon as next week. And of course, if that does expand access to tax breaks, that will be even looser fiscal policy in the United States, which would likely provide a further potential boost to economic growth in the States as we move through next year. In terms of other bits and bobs, we also had a few headlines in terms of the ECB. There's going to be a lot of personnel turnover at the ECB over the next, 2.5 years or so. The first one to be leaving is going to be Vice President de Guindos. He is off in May. And then in 2027, they're going to be the terms of Chief Economist Philip Lane, the Executive Board member Isabel Schnabel, and President Christine Lagarde are all expiring that year. The Eurogroup, who are the people, basically a grouping of Eurozone finance ministers, they have now kicked off the nomination process to replace de Guindos. His term expires in May of 2026, and potential candidates to succeed him include the Finnish central bank governor Olli Rehn, as well as Kazaks from Latvia, Centino from Portugal, and Vučić from Croatia. It is worth noting that this appointment process is far from straightforward, not only because it's the EU, but also because they are seeking to balance North versus South, hawk versus dove, gender, which other countries have a spot on the board. There are a lot of moving parts. There's also, over the years at least, been a tendency for the president and the vice president to come from opposite sides of the block. What I mean by that is we have tended to have a president from the north of Europe and then a vice president from the south of Europe, and then that flips on its head. So there's a lot of moving parts in terms of who will be nominated to fill that job. And just lastly, in terms of central banking, we've had some more Bank of Japan sources over the last 24 hours or so. Reuters citing their sources, noting that the Bank of Japan is likely to maintain its pledge to keep raising rates, with the pace of those hikes dependent on how the economy reacts to each increase. Of course, money markets at this point are now pretty much fully discounting a 25 basis point BOJ hike at their meeting next Friday. Moving on from that, just a few bits and bobs of corporate news before I hand back to you, Ryan, and let Clive go and buy his gig tickets. Tesla, apparently their US sales have reportedly dropped to a near 3-year low in November. This is despite them launching a cheaper version of the Model Y and the Model 3. This was Reuters citing data from Cox. Moving into what?
From who?
Cox, C-O-X.
Oh, okay.
Grow up. I knew you were going to. That's why I mentioned it. Excuse me. Moving into the tech sector. Alphabet may be getting another fine from the EU, apparently. This is because the EU is accusing Google of favouring its own services in search results, and that their efforts to comply with EU digital services rules are still not enough. This is according to Reuters, citing sources. I saw a stat earlier in the week. I can't remember where I got it from now. So if you are listening and you gave me this, thank you very much. But the EU last year generated more revenue in fines that they got from US tech companies than they generated in corporation tax from EU-based tech companies, which I just thought was absolutely mental. But it also shows you why they keep doing this, because it's actually a bloody cash cow for them.
Well, like, the thing is, it just revealed what we all kind of knew, which was the reason they're doing this is pretty much solely just to raise money.
Well, yeah, exactly.
And it's just another form of taxation. Now, the interesting thing about this, I say interesting, it's because I'm a bit of a boring cunt, but you're not meant to giggle at that bit, but thank you, my friend, is that we all knew it, but now it's kind of on paper, and it got quite a fair bit of traction on social media. This is the kind of thing that now Trump will see that everyone else sees.
Oh, absolutely.
Like to react to it. So it might be one to watch. Now it's kind of become a bit of it's gone viral. Trump likes things when they go viral in more ways than one. So yeah, it'd be interesting to see if he picks up on this, because it's we've known for a long time that he absolutely hates the way that the EU is penalising US megatech.
Yeah, and actually rightly so, because it does appear like they're just looking to get cash out of them. And I'm no lawyer and certainly not an expert on EU law, but it does seem as if a lot of this is very, very flimsy, and it's just, trying to get another billion here and another billion there, or whatever it may be. Anyway, that's certainly one to watch. Moving on, TSMC, they're apparently looking to produce more of their advanced chips at a second plant in Japan to feed what they're describing as an AI boom. That's according to the Nikkei, citing sources. Disney and OpenAI, they reached a tie-up yesterday. Apparently Disney are going to bring various characters into Sora, which is the image generation thing within ChatGPT. Disney are also going to throw $1 billion in equity into OpenAI as well. And sticking with the AI theme, Rivian, they have apparently developed an AI chip to replace NVIDIA in future vehicles. This chip is apparently 4 times better than whatever they're currently using from NVIDIA. And apparently at a later date, they will add LiDAR sensors to future Rivian R2 vehicles, which I'm assuming is something great, but I don't know.
Well, LiDAR is actually seen as basically the best technology for these kind of driverless cars and stuff. And that was one of the things that when Tesla decided just to use cameras, a lot of people kind of rolled their eyes and kind of thought, hang on, this seems like the cheap get out. And it's open to some like bugginess and whatnot, because LiDAR actually kind of sends, I don't know how, I'm not going to pretend to know how it works, but basically it can map what's in front of you, spatial awareness, very, very well. I'm sure someone's looking at, listening to this going, Ryan has no idea what he's talking about. And you're exactly right.
Well, you know what? You sound like you know what you're talking about,
which is a rarity.
Good enough for me.
Which is a rarity. Where was I? Right. Are you done?
I am, yes. We've got 11 minutes.
Perfect. Let's crack on with the Overnight News Roundup, or highlights from the Overnight News Roundup then, courtesy of our good friend Zach Eisman. Again, as always, do follow the Substack. Where are we? Right. Larry Ellison. Bad day for him yesterday. He just lost $25 billion in one day. Oracle's historic share plunge wiped $24.9 billion off Larry Ellison's net worth after the company reported surging AI data center spending, that it isn't paying off fast enough. That's one expensive earnings report. Trump signs order to override state AI laws. President Trump signed an executive order to create a unified federal AI standard overriding state laws. The Justice Department will form a task force that could withhold federal funding from states that don't comply. Lululemon, CEO of their that outfit, I see what I did there, he's out, and stocks jumped 10%. Always a bad sign, isn't it, when you get binned and the stock rallies. Lululemon announced the CEO, Calvin McDonald, had a farm, is leaving without a replacement lined up. But investors didn't seem to mind. The company raised profit forecast and shares surged 10% after hours.
Now, I think,
go on,
just on that, there's a bit more context around it, which is I'm pretty sure, because, I'm up on Lululemon. It's my favourite brand, as everyone knows.
That's because you're a dirty perv.
Oh, no. I'm pretty sure that the founder of Lululemon is launching some sort of proxy fight to try and bring himself back as the CEO or something, which might be why the stock has rallied, because everyone's kind of gone, oh, well, maybe he's just going to come back and save the day.
Oh, okay. No, I like what he's doing there. Cool. Moving on, Coinbase about to launch prediction markets. Who isn't at this point? Maybe that's what the P in PIQ should stand for, and we can just launch our own prediction markets.
Given we're not allowed to say what it does stand for.
Well, absolutely not. I don't know what you're on about. Sounds crazy, obviously. Coinbase is planning to announce, moving on, Coinbase is planning to announce next week that it's launching prediction markets and tokenized equities, two of the hottest products in finance right now, chasing the ball. Uber, they want robo-taxis in 10 plus cities by the end of the next year. Uber expects to offer the robo-taxi services in more than 10 markets by 2026. Yes, Clive, you're completely right. The company is betting big on an industry it thinks will eventually be worth at least $1 trillion. The US regulators, they just approved new service that takes a critical step towards moving stocks, bonds and treasuries onto blockchain technology.
Who a big deal wants that?
This is a big deal for crypto and traditional finance, according to Bloomberg. Trump pushing to loosen marijuana restrictions. The reefer. President Trump is expected to dramatically loosen federal marijuana restrictions, reducing oversight at the same level as common prescription painkillers. Cannabis industry could be about to change forever. Remember when cannabis stocks were like the big thing a little while ago, and then they just all fell to pieces? Wasn't there a shit ton of them on the Canadian markets, TSX and all that stuff? Right?
Yes, I don't know why they're all listed in Canada. I'm sure there was a reason for it, but you're absolutely right. And then it all just kind of disappeared again.
Yeah, well, maybe we got a resurgence of that. I don't know. SoftBank eyeing data center giant Switch. SoftBank is studying a potential acquisition of data center operator Switch, according to sources. Masayoshi Son is doubling down on his AI infrastructure bet. Costco keeps winning as shoppers hunt for value. Costco's quarterly profits beat expectations as price conscious American shoppers keep flocking to the warehouse giant. Value trade is alive and well. Bank of Japan set to hike rates next week. Almost 2/3 of analysts expect the BOJ to raise rates at its meeting next week, with hikes coming every 6 months after that. The terminal rate forecast, 1.25%. The UK economy shrinks for the second straight month. Obviously, Michael just mentioned on that. This obviously contraction came from both services and manufacturing, and I think construction as well, to be honest. So grim all round. Obviously, we're expecting Bank of England to cut rates next, aren't we? I'm sure we are.
Yes, next Thursday, 25 basis point cut is pretty much nailed on.
And then we do nothing until New Year. I mean,
Feb, yeah.
Yeah. No, I meant instantly, to be honest.
Oh, well, yeah, but maybe we won't do anything till Feb. Some would say that's probably accurate. So
true. Broadcom, they reported rapid revenue growth as AI chip demand keeps surging, but shares still fell after hours. Analysts are questioning sales forecast and future margins. PepsiCo secret Walmart deal just got exposed. A newly unsealed Biden-era antitrust complaint reveals that PepsiCo offers Walmart special promotions and discounts it doesn't give to any other retailer. Competitors won't be happy about that. Intel
could fizz up and bubble over, couldn't it?
Oh, well done. Intel caught testing tools from China Link Company. Intel has been testing chip making tools this year from a tool maker with deep roots in China, one that has been previously targeted by US sanctions, which could get awkward given that the US government technically own part of Intel. So we'll see how that works. India fast-tracking visas for Chinese workers. India just cut the red tape to speed up business visas for Chinese professionals, a major step to boost ties between the Asian giants after chronic delays cost billions in lost output. So a couple of things on this. One, it's obviously showing a mood getting a little bit better between India and China, because obviously sometimes they're friends, sometimes they're not. But also this is definitely kind of trying to leverage the play after the Trump administration of kind of reducing access to visas from foreign nationals. So we'll see. And obviously it looks like India are trying to pick up the slack and get these the brains from China into India. But we'll see how that develops. But that's it from me. Back to you in the studio for the final time of the week.
Good stuff. Thank you, Ryan. Well, in terms of today then, there is absolutely bugger all going on. We've only got one data release on the calendar, and that was the UK GDP numbers, which we had out about 2 hours ago. And the rest of the docket is completely barren throughout the rest of the European and US sessions. We are due to hear from a few Fed speakers, including Paulson and Hammack, who are both 2026 voters. And we're also likely to hear from the dissenters from Wednesday's meeting, Goolsbee, Schmid and Myron. It is, of course, customary for those dissenters to issue a statement or pop up on business TV to explain why they voted against the majority at that meeting. But besides that, there really isn't a lot on the calendar today. Of course, market participants will continue to focus on trade and tariff headlines and any geopolitical developments. And there is some lingering potential for gapping risk over the weekend if we were to get any unexpected news flow. But given that it is the penultimate Friday before Christmas, I cannot imagine markets are going to be especially interesting today. And for this morning and for this week, that is all from me.
And look at that, 4 minutes to go so Clive can log in and order his whatever Celine Dion tickets or whatever it is he's buying.
And he can buy me a beer later for our punctuality.
I'm going to see if I can get in, but unfortunately it's looking unlikely now, so I might have to have a Friday piss up without me. But anyway, enough about our social
My
life.
day's getting better and better.
Oh, you liar. Michael, thank you for another great week. I hope you start feeling better, my friend. Listeners, thank you for tuning in all week. For those that have, especially those that tune in live, we really do appreciate the effort. Whatever you're doing, keep it tight, stay safe, have a fantastic weekend, stay out of trouble, and we'll see you all